Good afternoon, everyone. Good to see you all today. Welcome to the PivotBoss monthly market outlook for June. This is our second go round. We did this the first time, which was Act 1 last Friday. However, some technical difficulties knocked the recording out there and some other things. It was just it wasn't a smooth recording, so I thought, let's give it another crack. Let's try it again. And this time we'll get it right. So that's and you know what, it's a pretty good week for it. We've had a pretty good week already, and this time around I already see much better candidates, so I wanted to go ahead and get going with looking at some of these markets. So if you're new to the webinar, thank you so much for hanging out today. My name is Frank Ochoa, also known as Pivot Boss. I wrote a book called Secrets of a Pivot Boss. You can learn more about me at pivotboss.com, also at pivotbossmasters.com, and through my Twitter feed at PivotBoss, and some of the other social media outlets like YouTube, PivotBoss TV. And what we're going to be doing here is looking at the futures markets and also stocks. So we're going to be looking at some of the futures markets. We're going to be looking to see what some of the setups could be, which ones might be setting up for something over the next month, maybe the next few months. So we're going to look at a higher time frame. We're also going to do some stock picking here. We'll look at some symbols that you want as well. But one thing, I already have a pretty good list that I wanted to get to, and then from there, anything that you put out there, I'll take a look at as well. So thank you so much for hanging out, and let's go ahead and get started here. So I'm going to start with number one here, which is the ES. And the ES today kind of played out as we expected, which is to say we got a bit of an upward squeeze after a failed new low. And that is always a very good indication right here that you're about to head the other way. So price was below yesterday's low and could not maintain acceptance below there, and instead started to push higher. That trap, that bear trap right there, allowed price to push higher. It fueled the up move, and that's what happened this morning. Pre-market, we already saw it happen. It was while we were sleeping, or while some of us were sleeping, perhaps, depending upon where you are in the world. But for the most part, by the time I got up and I was looking at the market, it had already rejected the low. I didn't have to think or do anything. The market had already showed me a rejection of that low. And as long as we can hold a key level, 2760, we should be able to grind higher the rest of the day. And that's kind of what happened. Closing the day, you know, up here around 2780s, 2782. That's pretty significant there for a day that just kind of was grinding around. Overall, we still haven't reached an edge yet, and we still haven't seen rejection. We've just been squeezing higher. Last week, right in here, I mentioned that if we reject prices up here, we could drop into the zone, but we never did. Instead, we held, and from there, the idea was that we could be looking at a continuation to the upside. So it looks like right here someone's having audio problems. Okay. Thank you, Desert Dog. And then let me see here. Yeah, so far so good here. Let me see. There we go. Alright, so now we got the Join Me app out there. That's a much better way to connect sometimes if you're having issues connecting to audio with the browser. Alright, so this one right here has continued to chop around. Remember, right here you can see down here we had lots of good buying pressure. Every time it got down here it would pop up, and it'd go right back to the middle here, 2703. That's been our key level since basically the beginning of the year. That's February 6th, I believe. And then since then, we've come back to it when we gotten too far away. We've recently chopped around it a bunch, coiling up, and on this day we started to break and run, and we haven't come back away from that level. And I mentioned at the time, once we broke above 2741s, any return to that level could be a great buy for a continuation. So I think right now this thing continues to look strong. It looks like 28 to 29 quarter could be ahead. So 28 evens up to 28.29 quarter, which is the FOMC key level from January. So I think the trajectory is up right now. It's definitely to the upside. We've had all of this compression right here. It's broken to the upside. It's come back. It's pushed higher. You can see right now that while we did have higher and higher value relationships, it went lower for a while. Then it got compressed with a narrow value relationship here, and we got the upside break. Now we have a higher value relationship this month, but we haven't come back to it. And that's what I was talking about last Friday, that if we come back to it, that would be a great buy for a continuation. So we've continued higher. We've broken out of this tight compression here. We've broken to the upside. The first pullback was defended, where market structure is higher each and every time now. So we had market structure here, then here. Now we're going to drive until we hit an edge, and then we're going to probably pull right back to 2740 and perhaps build out. And again, if we do reject up here, reject these highs, not only could we get back to 2741, but we might get all the way back to the midpoint of this range, 2703.75. So right now I think we have mostly an upward sloping trend on our hands that has more upside, but it's limited right now, limited upside. It would have to prove it can really push and chew through some of this from up here. It just hasn't been able to after that. It hadn't traded it for much. But over here, sold off, sold off, sold off. And if we come into it again, if we sell off 2703s here, that could be a 100 handle move right to that level. And it can take anywhere between 3 and say 7 days. I mean, it could be very, very fast. So actually 2. Look, over here it went from there to here in 2 days and then some. Over here it was 1, 2, 3 days. Over here it was more like 6 or 8. So we can definitely do it. So that's what the idea is right now. But as long as you're in an uptrending market, failed new lows are a great way to enter in the direction of the trend. So that's kind of the outlook here for the ES. If you look at the NQ, very similar, but we are at highs. So this one also broke to the upside, got a major consolidation trend type of behavior. We saw this thing basically form a compression that once it broke, I mean, it really hasn't looked back. It's been considerably bullish. That compression all happened right at 66.53. Again, that's the midpoint of our key range. The edges of the key range are where it's at. That's where it's at, especially, if it's a wide key range. That's why here we were looking at a buy. Here we said if it gets below, it's a buy back to that level and perhaps across the range. Up here we were looking for a sell. If it gave out 7K, we were looking for a return here and here. Now we're here again. We are above this key range high. We got barely above this high. And so now we could theoretically build out up here and fail yet again and come right back on down the range before perhaps bouncing back up. This does have quite a bit of juice behind it, so it needs to be a very clear rejection of those highs. Otherwise, I would still stay bullish until proven otherwise. But I'd be watching for those days where maybe a major failed new high occurs or maybe a stop run day occurs. Like this, for example, was a major failed new high that turned into a huge stop run day. Here was absorption before another absorption day, failed new high within a down move. So all of that just progressed and exacerbated the situation. That could be the same deal here somewhere. Now before I mentioned that this wedge and we talked about this last week, that wedge can provide a great opportunity to see this thing squeeze from 7,000 into 7,200 very quickly, followed by the potential to get as high as, say, 7,300. And so we've seen this play out very quickly. 1, 2, 3, 4 days, and we were there. Now we've pulled back. We're showing a failed new low. We hit prices below the 8-period moving average, which is that golden moving average. And that's the best spot to defend if you're bullish. And you can see how this thing has turned around from the day's lows, turned it around and pushed this thing higher. Looks very, very nice. So we could be looking at more upside here as well. As of right now, you can see this is the low of the month. And from that low, if you project higher, average monthly range over the last 10 months, you get that price right there. That is 74.40 basically. 74.40 is also the 50% expansion target from this key range. So that's your 50% level. So right now, that's your average range target over the last 10 months. This is your 75% target. That gives you a high probability target zone. So just say 7,400 would be high probability. So that's what we could be looking at here soon. So how do we capitalize on that? The best idea right now would be to watch to see how price responds early next week. If price comes back to, say, the midpoint of today's session, and you start to see defense or maybe more rejection here, the midpoint being right here, that's 71.44s. That could be a nice move here. So if you are looking at options, so right now you have the 7 and the 42. So you're right in that you're right in that sweet spot where you're about to, you either have to really nail it in the 7 days out, which can be done. It's just once you get up this high, I think that down here at the bottom is where you really see more release. Up here, things can happen. So, what I would do is look about 45 days out usually. It depends on the situation. And also if you're selling, for example, a put credit spread or something like that, then 7 days out is great for that, right? So it just depends on which strategy, which approach. The 42 days out it would be if I was directional, so I'd give myself a little bit more time in that case, and then perhaps do some sort of vertical spread. So it depends on the idea. If I'm doing like a put credit spread, then definitely I'd go with the 7 days out and picking at the money or something like that. But this thing right here has the potential to see some nice strength, especially if it starts to work through the 7,200 zone again, 72.14.5. Then it really starts to open up to the upside and continue higher. But if there's any rejection up there, any significant rejection, we could be cascading down the line at some point. And so that's something that you always want to consider. When are you wrong? And because look at the general flow of this trend. It's been like this kind of, right? And so there's this type of correction. We had an even bigger one here, and maybe at some point we get another one, right? So it might be coming. And overall, we're kind of stuck in this range to begin with. That's why we formed it. So coming back down would not be out of the ordinary. So we have some wave likely coming, but right now we are kind of in the final phases of the current leg. Alright, so that's a little bit about the NQ right there, but it's looking like it could be pretty decent at some point. We'll keep an eye on that one. Let's see what else we have here. Let's talk about crude a little bit here. Crude oil. Now I closed down my visual trader, otherwise I'd show you what it looks like. But with visual trader, I have composite VWAP along with my standard deviation bands above and below, what I call the PivotBoss bands. And right now price is sitting, it's basically it looks like that. Actually, it looks better than that. It's kind of like this, 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 this. That right there is R1, and VWAP is below it, and basically that's VWAP. So it's something like that. This one has more jiggle to it, that's why. But so basically every time this thing has gotten to the R1 zone over the last, since October basically, it's been bought and bid back up almost every single time. The only time it didn't, it hit VWAP perfectly, and again that was right here, and again that sparked the latest big move. So we're right at that zone again. We're at a zone where we could see another round of strength. When you look at this thing in the lower time frame, you're noticing rounded behavior on the bottom end of this range. So 1, 2, 3, 4, 5 days of digestion, 5 days of development. And it's also happening off of this key range high, which is 66.29, basically today's high. Basically, that's the zone that means everything. We're also looking at the previous month's low, which is that white line. So all of this right now is pent-up energy that could really release itself to the upside. If it could push through 66.29, 66.30, it's a quick move back to recent highs. That's 68.70. 68.70, that's a quick move right back to that target. So, I mean, I'm talking within 1 day, maybe 2 type of thing. It can, when it wants to, it can basically make the move. Like right here is one of those days where it makes the move in 1 day. Over here, it makes the move down big time. Over here, it made the move. Over here, it made. I mean, it's one of those types of days that would really lift up once it gets going. But then the 2 to 3 or maybe the 3 to 5 day move might get you as high as 69 to 69.5, maybe into 70, but that's about it right now. I mean, this was such a significant drop. Failing to hold below the previous month's low gets you the midpoint, and that's pretty much it. You don't want to be too greedy in this instance. So again, this is building some significant energy. What I would say with this one is Monday, watch for signs of a stop run day. A stop run day is one of those days where the stops come out all at the same level, and it's a major day where the stops just keep on going through that zone. And so, for example, that's a stop run day, that's a stop run day, that's a stop run, right? Those are big days where the stops come out. And when that happens and you notice it on that day, you lean into the trade more, and you become more aggressive, and you hold on throughout the day, because on a day like that, price will tend to close in the upper 15% of the day's range, or the lower 15% of the day's range, depending upon which direction we're going. So they're very important days. They're huge days. I think crude oil is building for that type of day. But this is one thing I will caution on, is if price breaks through that 66.29 and starts to drive, and then all of a sudden it starts to fail and we close back below 66.29, I mean, that's going to be a failed new high and a significant downtrend. We will likely be at 62, 62.50 within 3 days. I mean, if that happens, we will be there very quickly. 62.18, and it wouldn't take more than 3 days. So this is there's 5 days of energy built up into this pattern. So whenever it gets released, it's going to go. I think based on the history and based on what it looks like here recently, it's building to go higher. But as we know, markets move not because of history, but because of order flow at that moment in time. It's what's happening right there, who's positioned, where, are they winning, are they not, who, that type of deal. And so if whoever is defending this move right now doesn't get paid, then their stops will lead us back to 62.18. And if they do get paid, and they squeeze all the shorts that got short below 66s and 66.29, then their stops will lead all the way back to 69, maybe as high as 69.50. So that's kind of the game right now. With crude, we'll continue to watch it. YM. We took a look at the YM in the pre-market report this morning. This one has been one that's been really, really nice off of our form of analysis. What I like to do is look at the extremes of the range, the major highs, the major lows, and it has to be an impulse move, which means it has to happen very quickly, abruptly. In this case, it rallies until it can't go any higher. It sells off sharply until it can't go any lower. And on that day alone, it formed a low and then it hit the midpoint of that sell-off. And right there, it gave us this key range. And what I mentioned at the time was that was such an intense sell-off, such an intense impulse move, that it was designed to keep prices inside the range for the foreseeable future. Somewhere between 6-8 months out, maybe even longer. And so we knew that the day that this happened, this move, 6 days in or so, we knew that we'd probably be in this range for the next 6-8 months or maybe even more. And so the idea in that case is to look to fade the edges. Fade the edges back up, fade the edges back up, fade them back up. If it gets too high, fade it back down, fade it back down. And so right now we've basically traded in that pattern for a while. We've gotten a recent break to the upside right now along with a lot of the market. And is this a transition day? Are we about to transition from the lower half of this key range to the upper half of this range? Well, maybe not above the 31.31. That January 31st level is significant. We haven't tested it, but maybe we can trade somewhere in here, which is what we've done before. So again, big time movement off of this range, but the edge in this approach lies in waiting and being patient out here, because when price gets out here and shows rejection, you got a clean path to get back to value or to get back to the center point. When you're trading and chopping around here, you don't have that edge. All you get is chop. You get chop, 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 chop until it finally makes a decision. And so right now it's making a decision. It's going up. I would keep an eye on the previous month's high there. That previous month's high means everything. I think in this case right here, we're holding above it. We got a failed new low here. That all suggests that we should continue higher, and this is the next target up right there. It's 25,785. That's the next likely target as long as price can continue to hold. Call it 24,886, something like that, right? We could drop into there and still be a good buy up. So out here though, that's going to be a spot to look for a rejection and a return back down. So a lot of these markets are following the same type of pattern right now, which is they're flowing to the upside, but there's going to be a limited amount of upside until they find resistance. That is not to say that they won't break to the upside at some point down the road and we get a major upside continuation, because that's been the market for 10 years straight, it seems like. But at the same time, the market's gone a long way really quickly, and this range is designed to keep prices there. So I'm still going to, whether we find resistance at the highs or somewhere below there, I still believe we'll stay in this range for, again, another 4 months probably. I mean, we may not be breaking out until October, but we could, so anything can happen, but at the same time you got to go with the odds and the probabilities, and those still say to fade the edges. So right now we're working toward an edge, which means to continue to buy in the direction of the move, and at some point we may see some sort of rejection. So alright, we'll keep an eye on that one. Gold here, this one, gold's been one of my favorites, but ever since I don't know, I guess right in here I kind of fell out of favor with it. Maybe even earlier than that. I mean, it's been really choppy, really crazy here, and then right now it won't even move. It's very, very compressed around the apex of this ascending triangle. You see 1300 right here as a key level. That's the level it's straddling right now. The bottom of this key range is 1309s. The top of the key range is 1365. The midpoint here is 1337. So again, you get too far out, it comes back to the mid. You get too far out, back to the mid. Too far, the mid, the mid, the mid, right? Except for this time it failed, and now we're compressing. So the question is, are we going to break to the upside or the downside, right? If we break to the upside, it would be back above this key range low, which means we go back to the mid, 1337. But we have enough juice here to get there quickly, followed by perhaps a continuation to the opposite side. So this seems like the path of least resistance right now, is going back up the range, because you would have a failed new low here, where this thing tried to go lower and failed, and then it would just squeeze it right back up. So I'm thinking 1337, 1365. And I think a move to 1337 would be rather quick. Think 5 to 7 days. I think half of that probably could be done in one day. And then the move across the range would take a little longer. So I think this could happen quickly, followed by, say 5 to 7 days, and then maybe 2 to 3 weeks out, we're probably here. Now again, we can do it much faster, but it just depends, with the volatility of the market dropping here as we head into the summer, that's something you have to consider, and it might take a little longer in that case. But I think this one's looking good if it can get above 1310. A play to 1337 is a high odds target. Take that trade. I mean, it's a good trade. If it fails through the bottom here, that's 1290. If it breaks through 1290, we will be dropping down perhaps into this LVN, and that's about 1260, 1262. It's going to look just like this. It's the same deal. Boom. It's the same pattern we have going on now, and it would drop, and it would be a huge day like this. So we've already done that pattern twice in a row. Is it going to be 3 times? We did it here too, right? Boom, dump. Then we did it here. Boom, dump. And now are we going to do it again? There is a channel here that's building out. So that's what you like about these patterns, is that, compression. And when the standard deviation gets real compressed and small compared to average, it doesn't say which direction it's going to go. It just says wait for an expansion. And sometimes the first breakout can be the false one. So if it goes up here first and fails, it will spark that move. And so that's something you got to consider on both sides of the market. You got to be cautious and careful with the breakout. If you see a rejection, then it's probably hightail it time to the opposite side. It's going up or whatever. So that's something to watch out for here. 1310 and 1290 key levels to watch. All right. Those are a few markets. If you have any other markets you want me to look at, I can look at those for the futures markets. Otherwise, I can jump on the stocks. One last one I wanted to look at here was the dollar. We've had the dollar like pegged perfectly. I mean, this thing has been incredible the way we've had it. Recently, and this was back in the April market outlook, we were talking about this compression right here. We hadn't compressed quite to that point yet, but we were here in this point right here, and I mentioned that this compression is building out in such a way that if it breaks above 91s, we got a clean shot to these two blue lines, 93,786, 94,102, and those are FOMC key levels. And both of those levels have been very important to price since their development. This one's almost a year old. This one's about 6 months old. Very important. Here's these two had accumulated down here and they rallied. So you can see again just how important certain concepts are, like compression leads to expansion. Additionally, you can see that duration of compression, how long it takes for something to compress, will also lead to it'd be proportional to how long the energy is released and how forcefully as well. So those are concepts that just continue to play out, and they have done so for a long time. So when you hitch your wagon to concepts like that, you can really get behind something. So this was really, really nice. Now that we've hit that zone, you can see last time we were in this area, we basically just chopped. So this is an impulse high. It wouldn't surprise me if we keep selling off to find an impulse low and bounce back, form a key range, and now we're stuck in this area, which means we might start to chop around 94s, and that could be kind of a point that, an inflection point or a pivot. So then perhaps you may have the opportunity to do some sort of neutral strategy in that type of environment. Alright, so let's take a look now at some stocks. I had some that we're really excited about here. Let's take a look at GD. GD I really like. I like any stock that has great market structure, and by market structure I mean these great price distributions here where you really see the price levels and they stand out very cleanly. Like it's very clear that 230 is a ceiling. It's very clear that 215 was a ceiling before it became a floor. Very clear that 192's down here is support, right? Even this little intermediate area at 205. So all these areas are very important. And you know, one thing you usually see if I, let me see, I go, so if I push the back button here a couple of times, beep, beep, beep. So right here, you have this price distribution, and then you have this price distribution. And whenever you form higher distribution, this one forms above that one, you need to stay above it in order to continue higher. As soon as you fail to hold above the top and you fail, I mean, the odds are incredible for it going across the range back to the lower edge. It's one of those trades that just happens over and over again. And so when you identify it, you can play it. It has very clear targets. All that stuff plays out. So it has great market structure. What happened here recently was this major sell-off. Boom! Hard sell-off. A bounce back. Didn't quite get the mid of that level, but close. But anytime you drop back below inside the previous distribution, you go across the range, and then you typically go all the way back up as well. And then you chop and trade just like you were before. So based off of that information, we have an upward bias. We have a strong rejection on this low. For those of you that have been around my training, you'll know exactly what this is called right there. That is called absorption. That is where bulls are absorbing right here. They're creating iceberg orders. They're coming in defending. They're taking liquidity out of the market at that point, and they're creating support. And at some point here, they're likely going to see a stop run to the upside as all of these bears who are getting short are getting paid less and less, and then all of a sudden their upside buy stops will fuel the move higher. So that's what's building out right here. It's one of my favorite patterns. Then you look at today and look at that beautiful rejection tail. You see that beautiful rejection tail also happened at the bottom of the pivot range, which is the midpoint between last week's range. It also happened below these lows right here, all those lows, and back and closed back above the close. That is some strong rejection. That's some strong absorption. I would say that any entry below Friday's close would be a good entry for a shot at getting a move back up. Remember, 215 is the target in this type of scenario based on market structure. And then if you look at this low right here and project higher average monthly range based off of this stock's personality and volatility, you get that target right there, which is 1560. That's your high probability target at 211.46. The idea here is that if you can enter somewhere close to 202, maybe 201, 201.02 is the midpoint, but anywhere between 201 and 202, you could be looking at a move all the way to 215. And that type of move, again, would take perhaps 2 to 3 weeks. Give it 3 weeks to get to that target. And so again, if you're looking out with options 42 days out, that's the July contract. With something like that, you could be looking at, again, a spread of some sort, especially with options that may be priced a little bit higher. But that's one that's really good looking right there that I believe will work out. Now keep in mind right here, that is the point where it all breaks down. So if at some point this thing starts to go and then it fails and then, man, it can't go anymore, the stops will come out here and we will go to a new low. We will go challenge this low right here. So that is the level where it all happens. Alright, here's another one right here. This one is FNSR. I really like this one too. Really liking this one. Again, key range analysis really quickly. That's the key range here to here. So we had that low, strong move up to that high, came back to the midpoint. So you can see, you trap here, you return to the mid. The mid was offered here, back down. You go down here to the 25, some absorption. So this lower level is very important at 17.2. That's that level. Remember, if you come down here and get trapped, you come back to that mid. That's 21. Right now we have upward sloping range, kind of an ascending type of pattern. It's been building out below this key range low for a period of at least 2 months. That's 2 months of energy that's ready to just explode. And again, look at today's bar right there. Nice rejection tail. You can see that these PIMAs, the PIMAs are the moving averages, pivot-based EMAs. They're all flat and pinched. That usually happens right before this thing explodes. So here's the idea. So wait for the break to get in. Very good question. So my idea for entries is always a couple of different things. You never know what you're going to get. But number one, I'm usually either if I think this thing is going to take off before I get a chance to get in the next day, like it's already running, then I might scale in a little bit the day before, right? Like right now, but the day's over. The other one is when price hits that midpoint, that's my entry, that's my trigger. So I like to get in before a breakout sometimes, and other times I like to get in after the breakout. It just depends. Now what's interesting about this one is we have earnings coming up. So that's where I think that this thing could get a major pop. If you can get in here, you might be able to get in ahead of a major pop that takes you up to 1966, which is value, followed by a run into 2131. So in order to protect against an earnings, just a crush of some sort, if you pick the wrong one, the option that I'm looking at is the 17 to 21, and that is June. So that's the 7 days out, because basically you have the this coming in, and that's going to provide the juice. So we'll see what happens with that one. But that vertical right there costs 90 cents right now. The 17 to 21, 90 cents, and here's 17 basically is that level, and that's the midpoint. So it'd be basically an at the money call spread, 17 to 21. You have this one coming up, so you're going to have defined risk, and right now at current price, 7.15, that spread is worth 90 cents. If it comes back to the midpoint at 17 even instead of 17.15, maybe you get it a little cheaper, maybe 80 cents, who knows, or whatever. And then from there, now you have well-defined risk, and no matter what happens on earnings day, you're okay. You're good to go. So that's one right there that looks really good, that I would consider. Now this is a different one. This has been, we've been watching this one in our trading room. This is a different one. This is one that you may want to wait for the break before you get in. This is a compression candidate. We've been compressing significantly here. Look at the rounded bottom right here. Very good candidate for a huge squeeze to the upside. As a matter of fact, the easy target here we have at 39.5, and then from there over time it likely gets all the way back to 46. But the trade idea here that we were looking at in the room is the July contract, which still has 42 days out, and it's the 34.5. It's 34.5 to 39.5. That's here. And before we saw that 39.5 was where the strike was, that was our target anyways, because it was the middle of this cluster. And so breaking back above 35, boom, opens up clear air all the way back up. A lot of juice in here of 2 months of compression. You can see things starting to change in here with the moving averages, and a little failed new low today. So this is one where, again, you can take the same approach as the last one, the FNSR, where you take it early because it was only, what did I say, 70 cents or 90 cents. This one right now is quoting 85 cents. It's quoting 85 cents. I think earlier we were looking at it, it might have been 70. So again, very cheap. And the only thing that's not good for this one, which was good for the last one, is that earnings is just outside the window for this one. So earnings on this day is the 26th. These options expire the 20th. So this one, that's why I said you might want to wait for the break on this one, but one to consider right there. That one's a really good one that's developing. Still has some time perhaps before a breakout, but looking good. Let's see, ROKU is one. We put an option alert out in the room yesterday. This is one that looks ready to go. I had a limit out throughout the day that did not get filled, but I'll be looking to get that one filled Monday. Hopefully, we'll see. But this one is one that's similar to the last two, actually. Actually, very similar to FNSR, and then kind of looks like Ben as well. You can see this is ROKU, and it has great market structure. 30 here, 38.84 here, 52 here, value 43.67, and another value level right here at 32.85. We just shifted it up to here. That's 38.31. So basically, we had a lot of action in here, and you can see the rounded behavior. That price distribution is likely done trading. The previous price distribution is here, and the one below it takes us from 30 down to about 18 or so. So it's either going to come down here and trade in the lower one, or it's going to come back up here and trade in the top one. It's probably done with this one. And so if you look at yesterday's candlestick here, a nice rejection tail. It's happening as these things got switched, kind of compressed. We pushed to the upside, and then they came and provided support. Little alligator mouth open action. So everything's pointing to the upside right now. Today was a compression day, didn't do a whole lot. Got close to triggering. The entry here was at the midpoint. I think I had a 2.05 limit here. I think it got close, maybe 210 or 215. Didn't quite fill. But I'll be looking for a failed new low now to help trigger that entry for the next round up. Again, if this thing can push above 40, we could be looking at a push into 52 to 50. So 50 to 52 would be the target. So this one, if you look out to July, again, July's 42 days out, something like the 40 to 50 vertical call spread right now, that would cost about 220 at last price, but I was trying to get filled at 205s. That's something that could play out here really, really nicely. Again, you need a transition day though. Otherwise, this thing can go sideways a lot longer, but it looks like it's getting close. So watching that one as well. Another one that I had on the list here is HAIN. This was on our list for this week and has already run off pretty nicely from our entry point, but I'm mentioning this one because this one has 2 to 3 months of trending potential. So we had it long on this day here. The midpoint was the retest entry. The idea for this one is the in the money 26s, and for this one we were looking in the money 26s to see if we can get it back somewhere between 30 and 32, and so very quickly at least. And so far from the midpoint retest, it's bounced really nicely. It's up another 2.3% today. Really, really nice. But one thing that draws me to this one, or draws my attention to it, is how you see these are lower and lower and lower. It's like a staircase going downward. And then here it stops being a staircase and it pushes above. And when it does that, it's an early signal that the trend might be changing from this to this, and now perhaps we're headed back to value. And that would take about 2 to 3 months. This was about however many months down, 1, 2, 3, 4, 5. That's 5 months down. We could be headed right back 3 to 5 months right back up based off of this. And so the idea is if this one were to close June above the pivot range here, above that high like it is now, then it would be above the pivot range for the month of July. Any pullback would be a buy, and you could be at 32 very quickly. And then all of a sudden you're doing it again and again and again. And so if you want a template for that, look no further than one we talked about recently, which is AAOI. Same thing, and we talked about this one back in April, but look at this here. Same concept, where this thing has been trending down, 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 and then right there, it broke above the pivot range, made it support, and closed above it. And then the next month it hit it here, and boom, it rallies. See that? So we talked about it in the room back on this day right here, which is April 11th. But that wasn't our entry. Our entry was on the pullback. Hey, let's wait for it to pull back. That's your first major entry. And then on this day over here, which was May 1st, that's our last monthly outlook, I said this is another candidate right here. Now it's sitting on the pivot range. This has a good shot to rally. We might hit 40 on the next wave. And it did even more than that. These 2 days were incredible. It got as high as 49.75. So this one's been one that we've been following for a while. And here around 25 bucks, we said it has a shot to get 50. I said this one could be one that doubles pretty soon. And look at that. It turned out very, very quickly. You never think it can happen until you pick the right one that's going by the rules that would allow that to happen. And that's what we're seeing with this last one again. HAIN is in the very same mold. I'm not saying this one's going to double, but from how this thing is turning off the zone down here, we have a very good shot to get back to, say, 39.43 over the next 2 to 3 months. And that's not nothing to sneeze at based on the fact that we're sitting here at 28.30. Perhaps the next entry could be even a little bit lower than that. So this one has some good longer term potential, 2 to 3 months out, maybe even more. Let's see here. MIK was one. Let's see, MIK. This has been a very nice one here. This was one for the room, our trade alert for the members. The idea behind this one is that we have earnings coming up soon, earnings on the 14th, and we might pop huge on earnings and get us to 2184s. And then over the next couple of weeks, we might get as high as 24 to 25. The reason behind it is market structure and also compression. So you can see down here this accumulation. That's kind of what happens here. We accumulate at these lows, and then we bust higher to 24. Then we accumulate and we bust higher to 24. We accumulate and bust higher. We've accumulated, and now we're starting to bust higher. I think we can get to 24s. But this accumulation phase is much more significant than this one or this one. Maybe this one rivals it. So I think it has a really good shot to not only get to 24, but maybe even get to the upper end of value. 24.94 is value high. This 18 and change here is value low, basically where they held it, and this is value 21.84. On 2 of the last 3, we gapped up to that level. So this one on earnings, we were dropping and sold off. Here on earnings, we were on the way up and gapped to it. Here on earnings, we were on the way up and gapped into it as well. Here on earnings, we were on the way up and gapped into it. So 3 of the last 4 did that. And the only times where we didn't is when we were coming down and down into those events. So, I mean, again, I'm not a big earnings player, but when you're able to pick the right strategy for the approach, you can do things the right way and help leverage the volatility that earnings brings. So I think with 20 here, that was our out of the money to 25. That's the spread. So we're looking at the July 2025, and at the time when I offered the alert, we were down here at 19. And at the time it was 60 cents for that spread. And then when the market opened, it dropped to 45 cents. So it actually dropped lower than 48 cents. Then I saw it go up to 50 and then 60. And right now it's sitting at $1.28. So it's already doubled since we put the alert out for our members this week. And we've just now gotten into the money. I mean, we're just in the money here. again, if this gaps up like we intend, I mean, this thing could be riding higher pretty nicely. So this is one that, while it's already run off a little bit, you know, you could perhaps a pullback entry could get you, could allow you to get into that trade and still take advantage of that one. Let's see. Another one over here is, this is Tesla. Now Tesla, I've noticed this. If you're going to short a stock, short Tesla. Like this, there's no stock that goes down like Tesla goes down right now. I mean, Tesla just goes down, and it does it sharply, but it always rebounds. I mean, look at the boom, big down day here. Boom, look at that. Boom, 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 bang, pow. All of these just bang. Like, you can't point at another stock, and I didn't even get the baby ones in here. There's not another stock that looks like that over the past 10 months. I mean, most of them heading into the end of the year look like that, and then in January they look like that, and then they have one big bump here and maybe a couple little baby bumps. But this is, if you want to short a stock, Tesla's the one. And so we've called some really good ones. We've also been on the long side a few times. And this one, we have a nice rejection here. Great rejection day yesterday. Today was about a midpoint retest. I was watching this one at the open. Price pushed well beyond the mid, so I was giving it some time to reject it. It finally did, but I didn't pull the trigger on this one. The spread that we're looking at is 320 to 320 to 295. So this is the 320 to 295. And so the idea is we just got a big push higher. This is a great rejection tail, midpoint retest. The rubber band's likely going to snap in the opposite direction. And when we do, you're going to come back to that midpoint of the impulse range. So we look like we're going to come right back to 295s. Usually that type of trade, again, 5 to 7 days, but can take, you know, it can take longer, it can take shorter. It just depends on volatility. If I quantify the targets based off of average monthly range, this is my PivotBoss Advanced ADR targets indicator. So from that high, you forecast downward average monthly range over the last 10 months. That's that level right there. It's 100% of ADR. That's 75% of ADR. That's well beyond. I mean, we could be putting on a spread that takes us down to 272. So, I mean, this has a lot of downside potential here. There's still time to get in. I would say continue to watch the midpoint to this high, maybe a failed new high. But if price starts to drive through this previous high in the mid and is not stopping and closes, this idea is done. So you do not want to close back above this high or this high. You don't want price to close above there. You want it to hit, reject, and that could open up a move. So that's what we're looking at there. Again, that's a June. I'm looking at June there. That's 7 days out. So I was looking a little aggressively there, but you could go a little farther out too. But I was looking a little bit more aggressive. Let's see. Now, taking a look at the last one here, this is Target. Here's Target. Now, this one is not one, you have to be very careful when you sell in a strong market, even if you have well-defined resistance, because it could always go a little higher. So, here's resistance right here, well-defined. Price is trading right around it. That's the previous month's high, just above it. Very clearly defined support area down at 68, and this is 78. So that's a 10-point spread right there. And I haven't looked at what to really engage with this one just yet, because again, you know, we've gone up on two big bursts here. To sell it, you just have to be very sure. So again, this one, what you'd like to see is a failure to hold above this white line. So you want to see a break back below it, very forceful, something like this, something like this, something like that. And then from there, a retest entry can get you coming back to VPOC. That's 71.43. So that's what we're looking at here, is the ability for price to either find acceptance above that level or the inability to do so, because the inability to do so would lead us right back. And that's what I'm looking for. I'd like to see this thing drop back to value, so selling back into it would be good. Again, 45 days out is a good sweet spot. And if you're looking at something like, we have 72 half and 70 are the option strikes 42 days out. You also have 77 half right here, which is basically that high. So yeah, I would pick something like that. But a couple of opportunities there, or different approaches that you can use for that. So that's kind of the list of stocks that I had there. I know some of you brought in a couple you wanted me to look at, so let me bring up a few of those here, and then we can call it a weekend. Again, I appreciate all of your time on a Friday afternoon. Here's DVMT, Dell Technologies, this one pushing higher. We've gotten a great rally out of this one. So you know the GD opportunity we were looking at earlier looks kind of like this one, but this is a bigger pattern where you have a strong rejection after a major drop, and then you have this absorption right here. That's the rejection, and this is the day we're at right now in GD. The very first example we looked at, we're kind of coming full circle. That's the type of move I'm talking about that we could get out of that GD. That's the trade that just happened here in DVMT. So that is beautiful the way that's played out. This thing has rallied significantly. It's hard to sell this one against that strong of a trend. It's barely at all come to test the 8 period. It's coming into major highs up here, so it might begin to see some sort of overhead resistance, but overall this thing is very bullish. Yeah, I wouldn't be looking to sell it by any means, and I think that any pullback is likely a buy opportunity until, or should, we see a rejection at these highs. But that was really nice, and again, look at the way you see this major sell-off and a bounce back up, and then the absorption right here and a lift off. This thing goes like that. Now, real quickly, just to bring you full circle, check out GD right here. And it's the same type of deal. You get this major sell-off, a bounce back up, and then here is your absorption. We're looking for something like that right there. So that thing could be a bullseye at 12.15, or sorry, 2.15. So yeah, this one's looking good, and that other one looked very similar to that opportunity. Let's see here. We also have, oh, here's a couple of more. CBOE. CBOE's been in a downtrending market. It got a bounce off this major low right here. We were all over that low. We said, hey, if this thing's going to hold, it's 97.5. Or wherever that was. But that was a really good level. It's holding right there. We have a downtrending market. So it has some upward force, but look at it pushing above the pivot range high and closing above it. And right here you have an inside value. So it looks like we have kind of a, an impulse sell-off with a midpoint test, maybe a key range here, builds out, and maybe trying to break a trend to the upside. So that could be interesting the way that one develops there. Thanks for posting that. We also have, let's see, CME was the other one. This one recently got a big break to the upside. We loved CME last year. This was such a great stock. You can see that, boom, just bouncing off these zones. Very nice. The music stopped over here. With this compression, though, we got renewed strength through 162.5 and pushed higher. And now one thing that you're going to see, again, this is like some of the opportunities that we posted back in April, March, and in May. But this is very similar, where you have a big strong trend up, and then you build out here and compress, and then when you get that big break, you can see all these moving averages are pinched and sideways. You see these start to open up. Now the next pullback is going to lead to another big push up, and it's going to lead to 2 and 3 waves of strength. This looks super bullish here. The only thing that could stop this one from really going up is this high. That high right there. We have this range. So if for some reason it really can't go and it starts to fail back below that level, I know we're below it now, but this is generating steam, so it's okay. But if at any point it tries and fails, then we're coming right back to the breakout point and right back to the previous low. But I don't think that's going to happen. That's just what would happen in that case. I think the odds favor more upside, and any pullback here is a great buy for a continuation. That's a really strong looking stock. Thanks for posting that one. We also have Snap. Haven't looked at Snap here in a while. This one got some really good strength. I haven't looked at their app in a while either. Everybody keeps saying, didn't you see what I posted on Snap? No. Those people are my wife and my mother, so maybe I should be paying more attention. But this little move right here is not bad. Nice compression, got back above the $12 level, which is here. And you can see the prior price distribution is from 12 to 16 quarter. So getting back above that level is not bad. You'll probably see this thing try to build some support there and then try to head higher to value, and then the other side, which is 16 quarter. So we might have a bounce coming from 12 to 16. I'm not a fan of this stock, really. I'm a fan. I was a fan of their product and their app, but then they made every wrong decision, and it just made it worse. And they're not listening. So and then again, I've never paid a dime. I don't have a big audience because it's very intimate kind of type of thing, unless you're a Kardashian. So, anyways, it's very difficult for me to see this one really rallying under so much pressure, and it's not making money. So, but at the same time, I do honor market structure, and the market structure looks great. And so, as long as it holds 12, I think you got 17s as a good shot here. And that again might take 2 months, but that's about what we have there. We looked at Fossil here. Now Fossil is one that we had on the books for a while, and it just continues to run, kind of like that TLRD we had. So look at that beautiful, beautiful range right here. Just a beautiful rounded bottom. We talked about this one earlier in the year as having a rounded bottom that if it broke to the upside, we could get a move all the way back toward about 36 to 38. And it took one major gap up right here, and from there it hit the rim of that pattern and just took off. So that one's been very, very strong. I still think that this has more upside to 36. The thing about these patterns is you just let it go. You just let it go. For the most part, it's going to get there. If it's on the way and it's running, chances are it's going to get there within 6 months or whatever, however long it took to develop. This might be 6 to 8 months, so it's going to take about 6 to 8 months. I mean, similar type of thing. And again, I'll point to a recent example that we had of TLRD. There it is. We had this one as a rounded bottom right here. We found it on that day at 12 bucks, and I said if we can get above 14.5, 15, this thing can start running all the way up to 39, or sorry, that's 29, right? And then I think we had an even higher target. No, this was the first target, was this one, and then this one. I said, let's get to this one by the end of the year. We might chop, and then go get the next one, and we have. So the power behind these are so incredible. And again, it's all that accumulation. And this one looks like, Fossil looks like it has more upside. Here's Triple M. Triple M holding 200, kind of a range. This one has been very, very bearish. Very bearish. You can see the key range here. It's been down. The market structure is very clear here. I would say if it starts to negotiate above 208, 209, then you have a shot to go another 10 handles higher. But with this one, I don't see anything super clear other than the trend has been down. We have a clear key range here. So, again, if it breaks above these highs, then you have that level. If it fails at this level, then you have this level. And that's kind of your symmetry right there. So Basically, a rejection here gets you back to here. That's a plus 10. Or a push through here gets you here, and that's a plus 10. That's kind of the short-term idea there. And then another one here. This is CLAM. Trending higher overall, holding at these highs. You can see resistance up here about 50. If I look at this on a weekly time frame, doesn't look that great up here, but this was nice. You kind of got this large rounded bottom. You know, all of that was unable to drop down. So 50 is a big time level. 50 is a big time level. I know we've done a lot to get there. I could see 50 being a level where it just takes off and drops, or it tries to make a move for 60. So we're at the point where it's either going to 60 next or to 40 next, and we're right there. The rounded bottom gives us a little bit of an indication that it might be to the upside, but that's on a weekly chart basis. You can see on a daily chart it doesn't look that pretty. So again, yeah, this one's also, one thing I would note about this one is look at the price action of these bars. It's kind of crazy looking in Wiki. You know, that type of action would give me a heart attack. So sometimes you just have to watch the price action of the underlying as well, because too much back and forth, it cannot be good. So I think this one has a pretty big move coming, but it's hard to tell. I think it's up above 50 to 60, but if not, it goes right back to 40. So we're right kind of there, and I think that's why it's building out up here. All right. Never admit to not paying attention. That's good golden rule. All right, so let's see here. If nobody else has anything else here, I think we'll pretty much call it a day here. I've got a few that I've been running through on the scan. You know, this is a pullback within an uptrending market. That's one that looks pretty decent. But other than that, I think we found some pretty good ones. GPN with the long-legged tail right into a range, that could be an expansion target or an expansion candidate. This one, the same thing, ESRX, kind of a long tail at these highs, can oftentimes be an expansion candidate. So not bad. Some of these looking quite bullish right now, so that could mean something for the market. Etsy's another one right here, showing a rejection tail right back into the 8-period average. That one could have a very, very nice continuation to the upside down the way. So not bad. Not bad. We got some good candidates here. I'll make sure to get the recording up and running. FNSR is one of my favorites. So that's a good question here. Number one, how do I get PIMA, range, and ADR in the color at the top of the chart? So I released that in the trading room only here recently while we're in there with a share link. I haven't put it on the resource library just yet, but I will. But I have just put it out to our members. It's basically an update to the recent code that we had of the last indicators, but this one has labels and some additional calculations. So I will be putting that to the members library very soon for both masters and the premium library. And so, yeah, I'll put it on both. And then also, with regards to with your pivot system, what is a technical definition of a downtrend? For me, what I do in my book is it's basically looking at the value area. It's value being created higher or lower, right? So in a downtrend, it's lower, and in an uptrend, it's higher. And so value can be looked at a number of ways. So value being created at lower prices, that is a downtrend. Value being created at higher prices is an uptrend. And so that can be the value area from day to day. It can be the pivot range from day to day. It can be VPOC shifts. You know, it could be whatever. So in my book, I mentioned that the value area can be kind of like the pivot range in that regard. So you can see lower, lower, lower would be a downtrend until it breaks up and creates higher value here, and now it's an uptrend. So that is kind of the basic idea behind it, at least with the way I see it with regards to pivots. Alright everyone, well, I want to say thank you very much for hanging out with me this week and today. I will get this put up onto the website. I think happy hour might be calling here. We will be heading out to the I think it's the International Wine and Food Festival in the Woodlands, Texas. A lot of big name chefs are going to be there competing and doing some cool culinary work, so we get to taste it all up. That's going to be a lot of fun, but we'll be back at it again on Monday, and I'll have the recording posted out pretty soon. So everyone have a fantastic weekend. Again, thank you so much for hanging out with me here today, and I'll see you all soon. Take care, folks.